I already informed you that I am coming to Dubai and Abu Dhabi in the first week of October. Our meeting in Abu Dhabi is on the 5th of October. Those desires of meeting me in Abu Dhabi on 5th of October may contact the WhatsApp number and the email ID given below. In case you have not already done so, kindly do so at the earliest. There are limited seats.
Hi everyone, I have Sashwath with me recording remotely, and I'm also recording remotely, and we have an interesting conversation for you guys today. And without wasting any further time, I'll let Sashwath introduce the topic of discussion.
Yeah. So today's topic of discussion is going to be where probably long-term interest rates might be heading. What are some arguments for why it could be higher? What are some arguments for why it could be lower? And we're basically going to figure out where we think it's headed, whether we think it's headed somewhere where we can look at it. So that's the topic we wanted to talk about today. So maybe I can start off by talking about some of the key developments which have happened in the recent past, which basically have a bearing on where interest rates might be going in the foreseeable future. So some key developments which have been happening is that one, inflation seems to be under control in the US, with the Federal Reserve Governor signaling a 0.5 percentage rate cut, and then signaling that he might be reverting to a 0.25 cut henceforth. So that's interesting because the Fed chairman basically is telling us that interest rates are higher than what it needs to be for the economy to be functioning properly. So that's one indicator which we're looking at. The second indicator which needs to be looked at is more to do with demographics, to see how an aging world, or in certain places a completely aged society. So for example, South Korea, Germany, Japan, these places are officially considered aged in the sense that they've already gone through the process of an aging society. And there are other places which are considered aging, where a lot of countries which are getting into their state of maturity are still considered aging. And another factor which we have to consider is the fact that globalization seems to be winding down, at least temporarily for now. And it seems to be that in the future we might have greater conflicts than what we're already seeing right now, with what's happening in the Middle East acting as an indicator, and what's happening in Ukraine, and the tensions between China and the US. So there seems to be a lot going on in terms of tensions around the world, which also means that military expenditure might be going up. So these are some of the factors which we have to consider. And finally, the major factor being that the US's fiscal deficit is rising. It doesn't seem to be slowing down, and also their trade deficit doesn't seem to be coming down anytime soon, because they are importing more than they're exporting, and this generally means that their currency doesn't have a lot of room to basically appreciate. And if their currency doesn't have a lot of room to appreciate, that would signal that imports become more expensive, leading to greater inflation in the US. So there are arguments to be had for both sides. One argument for lower interest rates in the future being the fact that the Federal Reserve thinks that inflation is going to come down. It's already coming down, it's going to come down further, which means that they can start shifting towards a dovish stance. Second factor being that you have populations which are aging, which means that savings rates are going up. For example, China is a big factor in the push for lower interest rates, because Chinese investments are being made in the US and in other parts of the world, which is pushing down the cost of capital. So these are some of the factors which basically signal towards lower interest rates in the future. But at the same time, I talked about globalization winding up, maybe, which basically means that countries aren't going to be willing to trade as much. And if they're not trading as much, cost of goods are going to go up. Another factor being that, like we already discussed, aged populations, where the dependency ratio between older people and younger people is going to increase, where more people are going to be dependent on a shrinking number of youngsters and their incomes, which basically means that we discussed this with the Mario Draghi video, where unless productivity goes up, we're going to start seeing a lot of pressure on the bottom line, and there's going to be a lot of requirement for capital, and this capital needs to be put towards helping the elderly in your particular country if it's an aged population, because there's not going to be a lot of savings to go around. So this factor inches towards higher interest rates, and also a higher inflation rate due to greater fiscal deficits and trade deficits, leading to more borrowing, which pushes up the cost of borrowing, which pushes up the interest rate. So these are the factors on both sides. So what do you think about these factors, and where do you think it's going?
Well, Feynman famously said in his lectures when he was asked, "What is physics? Is it science? Is it very predictable? Is it black and white?" He said it's like physics. He said it's like watching two gods playing chess, where we humans do not know any of the rules. So we are watching, observing two gods playing chess, and as we watch them, the game unfolds. We realize certain patterns, and then we say, okay, so this pattern keeps repeating, so must be a rule. Like the pawn can move one square, then suddenly we see it jump two squares, and we're like, okay, maybe it can move two squares. Then we're like, no, maybe only it happens when the beginning of the game. So he says physics is that. So he says even about gravity, we assume gravity to be working always. Still we find suddenly one day it doesn't work. So that applies to every single thing which we take as heuristics, or we see as patterns, and we like, okay, we think this is how the world is going to be, and lo and behold, something comes along which upsets the apple cart, and we're not able to understand why it's happening. Because if you look at history, interest rates, the way it moves, and stock markets, the way they move, they have a certain relationship, and we've always seen this relationship. But what is different this time around, like you rightly pointed out, is the aging population across the globe. And these are happening in developed economies. That has a huge impact. Second, the booming IT industry, these big monolith software companies are, which are mushroomed everywhere, and with the advancement of AI, has thrown us into a different trajectory where our old way of looking at things may not be very helpful for us at this current juncture. Am I to say the old way is useless? No, I don't want to throw the baby out with the bathwater. But it is prudent to sit and say, okay, applying old patterns, which we do know about interest rates being high, or the debt being high, on a country, and what impact it has on its economy, it is worth watching and being very careful as an investor when you're trading these waters, especially when you have these investments like viewers in our channel and different markets and different locations, to be cautious in your play. This is why you do see even the FII is looking very cautiously at India, because when you put the money here, you have to expect a certain growth, and your withdrawal must be easy. This applies for Indians sitting and looking at exposure at the American market. Most Indians are very enthusiastic when I speak to them here. They all want to go and look at the American market and the Japanese market. But I'm like, yes, but please be careful. When you find it very hard to analyze Indian companies and you're finding no time to do that, American companies are a whole another rodeo, and it's not the same. And the way you have to look at it is different. And do you have the bandwidth and the time to pay attention and deep dive in an American market when you're so many miles away from that market is something to ponder about.
Yeah, and one more thing to add. I mean, now that we're talking about markets, I might as well add the fact that American markets are near all-time highs in terms of its valuation according to invert the PE ratio, and you look at earnings by price, it'll tell you the earnings yield of your company, and that basically is at an all-time low, which basically means that you're paying a lot of money for very little earnings, and you're paying a lot of money to get very little amounts of return, which tells us that either you're expecting the valuation of your portfolio to go up, because let's say you think that the investors down the line are going to value your, let's say your company has 20 PE right now, it's trading at 20 PE, you're expecting other investors to come about and push this valuation to 25 times PE, or you're expecting a lot of growth to come in and basically pay for this investment which you're making. But either way, you need one either or scenario or both of them to occur, because if none of these situations occur, then you basically have a situation where you're facing very high valuations which you're paying for with no prospect of return. So my question here would be that Is there a paradigm shift? Because I was thinking about how in economics we talk about an equilibrium point which exists somewhere in theory, and no one can see this equilibrium point, but the market knows where it is and it goes towards that. And I don't know where the equilibrium point about for our interest rate is, and I don't know whether we're moving towards it, whether we've overshot it, we've undershot it, and it seems to me that the market isn't a clear indicator of what's happening either, because distortions generally are magnified by multiple folds in the market. So I don't seem to get an indication from how the US market is trading or the Indian market is trading to see where our interest rates are supposed to be, because the US market barely flinched when Jerome Powell raised interest rates to where he did. So I find it very difficult to gauge where we're going or where we even were just through by looking at the markets, which we would have been able to do 10 years ago.
This not only applies to your interest rate, this applies to geopolitical situations. If the world was in this kind of a precipice in all-out war in Middle East 20 years ago, oil would have reacted differently. World markets would have reacted differently. For some strange reason, we seem to be completely untethered from markets and realities. It is very strange. I guess this is how it must have been during the tulip bubble, because that's all I can relate it to. When mania happens, nothing can stop mania. But at the same time, there have been instances, like right after World War II, when markets ran ahead of earnings because simple reason they knew there is great potential being unlocked. So people priced ahead and it was justified. So is this kind of price running justified, like you said? I can't see where the justification is, like you rightly said, because I don't see where is this potential earning boom that is going to erupt worldwide to drive these huge global companies to the price to earnings where they're sitting at and the earnings potential to be unlocked. If anything, we're running towards more protectionism worldwide and there's more instability worldwide. And for global companies, multinationals, it will get harder to do business across borders as it happened during World War I and II, or even during the time when India got its independence. There are a lot of multinationals sitting inside India at the time, UK companies. They found it very hard at the initial climate to continue doing businesses. They had to pivot and move, like it's happening with European companies doing business in Russia, where they're forced to find a local partner to hand over things and say, we'll come back later, or some kind of, setup which is going on. So I don't see, you're rightly saying, but at the same time, is there a paradigm shift? I don't know. Is this justified? I can't say. It is very bewildering, to say the least. It just doesn't make sense.
Yeah, I feel like there's a sense pervading the market that regardless of what happens, we'll be fine. I don't know where they get the sense of security from, because I looking at things, I don't feel that sense of security, that everything will be fine, magically, mystically, something will come in and fix everything. And when it gets to the point of no return, we will step back from the edge, is what a lot of the market is betting on, that no one will ever take that foot into the point of no return. But I don't feel so confident looking at how things are going.
A funny thing, they said the same thing about Putin when he had his troops on the Ukraine border. They said, no way he's going to do it. We have crossed that line and gone well beyond all that. Yeah. Now, we don't even mention that. Same thing about Israel. He would not do it, but now we are well past all that. So I don't realize, it's just that the market just wants to be optimistic no matter what, Even when the boat is completely blown to smithereens and you're standing on a piece of log, and that's all, you're still saying, oh man, don't worry about the Titanic. We'll get there. Don't worry. Don't worry. You hold on to this. It's happening. I'm like, really? Where do I see this? And, but at the same time, you do find value in the market. I should not be, like a doomsday and say there is no hope, that every single thing is going through the roof. It's not true. There are good companies at fabulous prices even now, which the market is ignoring for reasons I can't understand. These are like really old companies. They're not like fresh upstarts with a great track record, and they have a product which has a good moat. They have a services, they have a brand, and it's fabulous the way they're being priced. And there are opportunities if you're willing to patiently sift through it. Finding the seashell in the beach where you're walking around and looking at the ground. Yes, you pick up a few broken ones first, but if you're willing to spend the time in the hot sun getting dizzy, you do find the occasional conch lying around where you can pick it up and, find some relief in this. I think it's just that we're so used to, markets reacting, like pressing the brake in the car and the car coming to a stop. We're pressing the brake and the car is not stopping. You and me being the driver and driver's seat next to each other, we're looking at it like bewildered, saying, "Isn't this dangerous?" But everybody else in the car saying, like, "Don't worry, man. If it needs to stop, it will stop. Why you trying the brakes? There's no reason to press brakes, Shashwat. The road is empty, the highway is empty, it's straight. Keep driving. So what? The brake is not working."
Yeah.
But me and you are like, what if we do need the brake? As long as the road is empty and it's straight, no one's there, sure, boy. But what if, there's no way we can see the future? I understand that feeling. And it is rather strange, the market, the way it is.
No, and I think the biggest threat is going to be if, actually, especially after the 2008 crisis, great financial crisis, there's an underlying sense of security that the lender of the last resort, the Federal Reserve, will come in and make sure nothing implodes if it implodes. I don't know if there's if we're going to have a big crisis, if we're going to have a big crisis and the Federal Reserve comes in and steps in and tries to bail everyone out. First of all, I don't know how much of the trust which we have in the dollar is going to retain after such a big debacle, if one were to come about. Because at the end of the day, like Yuval Noah Harari said, I mean, now he's not such a popular character, but when he wrote Sapiens, and he said a very important thing, which was that money is an imagined reality. And a system is only as good as long as everyone's trusting in it. And if such a big meltdown were to occur, I don't know how many people will choose to retain their trust in the system. And if they don't, then I don't know what's going to happen. This is something.
Well, even if you don't like Sapiens and the author, you can take Ray Dalio, and a lot of people respect him. He's a great investor, great mind. He talks about great cycles, and he talks about how, events happen in history and it accumulates to a point where how the reserve currency changes. There's a great video about it on YouTube. If people don't read the book, can see the video where he explains how reserve currencies change. Because a lot of you keep asking us, will the reserve currency ever change? Some of you are very optimistic, saying you would like to see the dollar go away and BRICS will come. I don't know. Okay, I don't see it. But dollar is not eternal. Dollar when it came to where it is during after World War II. Before that, no one was talking about the dollar. And so it can happen. There are reasons for happening. And it's like what Sashwath says is true. Nothing is the last forever till it doesn't last. The things only work as long as it works. And faith in currency, faith in anything is as long as we put into it. Even gold. We all have this fascination for gold. If all of humanity collectively tomorrow wakes up and thinks gold is useless, gold will just tank. I mean, the value of gold will become zero because we have someone who's willing to buy gold as prices are inching more and more, and we are greedy and we are buying gold thinking it's something. It's going up in value. But per se, gold on its own, it has no real use for human beings. We really can't do anything with gold other than ornaments. It's not a strong metal, you can't use it for anything other than just looking beautiful as far as we think it's beautiful. So is what you say is very true. And I don't know. As an investor, all I say is be cautious, look for opportunities and invest with opportunities and be careful. If you see and you have competence in what you're doing, then you can carry on doing it. But if you're, unsure and you're not sure, please do not follow the crowd and fall off the cliff. And like Shashwath said, maybe, these political bigwigs know something we don't know as far as Iran is concerned or Israel is concerned. We are completely in the dark because we are nobody. We are outside the whole paradigm and we're sitting outside all lines of communication. Maybe they know something we don't. But as far as I can see in the steps of history, how it's repeating itself, we are really setting ourselves for a real serious catastrophe. Yeah, we're going to have some dark days ahead of us if this carries on for another year, because the Israel crisis is over a year old now. Where finally patience snaps and someone decides to do something, I really don't. Because when you take a person to the point where they have nothing to lose, then you have a very dangerous situation.
Yeah.
Be it any side, either side. I'm talking about Israelis, I'm talking about Iranians. You pushed one side to the point where they feel they have nothing to lose, then all bets are off.
Yeah, I mean, in the Ukraine case, they've been pushing for using aerial attacks into Russian territory, which they've been denied so far. But it seems like Ukraine is getting more and more desperate. So let's see what happens. But to end on a more positive note, all of this is just speculation. Most of it will not come to fruition. And this is something which I can give to you in writing. It's the world humanity has always figured out a way, and I'm sure we'll figure out a way. So this is just a discussion on possibilities and also why we should always be careful, but we should go about business as usual when we have to. And that being said, value is everywhere, and just make sure that you're finding the pockets of value, the proverbial shells on the seashore.
True. Yeah. So keep investing, keep looking, because even during the Great Depression kept investing, they made money, and people invested during both the wars, they made money. So when you see opportunities and you feel safe enough and it's in your circle of competence and you're feeling sure of what you're doing, please carry on investing. Like Sashwath said, there's all much to do, a lot more noise than substance right now, as far as investors are concerned. Thanks for watching the video today, guys. Thank you again. Do like and subscribe to the video. Do share it with friends and family who find this kind of content interesting. I'll try and bring Sashwath again on board in the future to discuss more topics like this, since a lot of you have been requesting. And once again, thank you for watching. Be rich.
Thank you. Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends, and a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.